Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep going with our analysis of the euro currency. So you can see that music was playing not for too long, and actually in the next session so everything returns back to its own. And in general, interest rates keep going higher. Result of recent activity, we've got the bearish grabber on the euro currency. It suggests downside action, and we're still focused on the 104.30 target. So currently, in the current circumstances, it's difficult to say what the pullback happens, how strong it will be, but at least this is some long-term target, some important destination point that could hold the downward trend for a while, for some time, and provide some background for a possible retracement. So if for a scalp trader you're searching chance to take the long position in your currency, that's the thing that probably you could keep an eye on. For the others who are trading euro currency in a major trend to the downside, here you could search chance to go short once again. Yesterday it was a really sharp reversal around the resistance area that we have specified. It was difficult to catch the moment for selling, but in general, with the grabber here and with the current performance, maybe it will be a chance to catch some minor pullback here before downward action continues. And this market, you can see, it's keeping perfectly the flag, which is bearish, and was not able to go through it yesterday. So since we are coming to the payrolls report, and in general it's time to think about the weekly report as well, I have checked briefly just few headlines, and what I have seen is that actually investors start to see gradually daylight. So in fact, Reserve Bank of Australia start changing the forecast for inflation. Different commercial banks also provides a more skeptical view, making revision on the euro performance. So currently lots of banks also expect downward action to the parity with a different target. Somebody expects 102, somebody expects 104. So, but in general, the bulk of the analysis becomes more bearish for the euro currency. So expect further downside depreciation. That's actually what we were talking about probably 2-3 months already, even earlier, before the conflict in Ukraine has started. This was overall background that in general, European Union has much weaker position compared to the United States. So that's what about short-term technical situation. On the other markets, you can see the same grab we have on the dollar index. In fact, we could say that this is the bearish trap by the classical approach, by the Churchweiger, by the Murphy analysis, the whales of the technical analysis, classic of technical analysis. This is, in fact, bearish trap. The market returns back in the consolidation, and it suggests further upward continuation here. Here's almost the reversal bar. Not quite, but very close. So you can see this close slightly below the top of the previous session. So significant performance here. The same story we could say about the United States Treasury bonds. You can see they're growing higher. This minor consolidation was at the Fed. You can see no reaction actually, despite some dovishness in the statement. Very small pullback, and market returns back to the upward action. 305. So as we talked about this and promised that soon the rising yield will be not because of the matching to the Fed policy, but it becomes the sign and reflection of the default risk that investors start to demand for United States bonds high yield, just because they're becoming riskier, but not because of the rising of the interest rates. And this clarity should come, as we said, somewhere close to the end of the summer, so within a couple of months probably. It will become more evident, especially when the junk bonds starts to default massively. So this should happen relatively soon. So that's what we have on these markets. On the intraday charts, what we could say on the 4-hour time frame chart, we could see the same flag pattern and pullback directly from the 30% of the thrusting action. This was the ABCD pattern, if you remember, OP, this butterfly. So with this thrusting action, we suggest that might be a bit higher performance, but it hasn't happened. Market reversed really sharp to the downside. So currently, what we could say on the hourly chart, let's take a look at this is for those of you who would like to go short. We have the potentially grabber, so we need to wait for a few minutes to see whether we will get it or not. Actually, we have here it's minor cartridge triple to buy. If somehow we will get this grabber and market will able to keep going higher, maybe we will get this retracement to the 50% resistance of this thrust, and simultaneously this will become cartridge triple to sell pattern. And if we will get it, that would be a nice chance to consider taking for a short position. This might be a really good step. This rally might happen, I don't know, maybe on some not as perfect payrolls numbers, for example. This will be a bit weaker than expected, or maybe on some other information, but just keep an eye on it. So, of course, if you will get this type of action, it's better to not take a position immediately. But if it will be a relatively gradual action, something like this, that might be the nice entry opportunity around 105.60 area, 105.65. So, this is our view on euro currency. Let's wait for payrolls.